Thank you very much to everybody for joining us today. It's great to see so many of you here for this latest International Affairs webinar. My name is Ben Horton, and I'm a communications manager at Chatham House, where I work on the digital strategy for the journal. And we're here today to be talking about the role of the financial sector in a hopefully soon-to-be post-coronavirus world. I'm delighted to be joined today all the way from Australia by Leanne Sim. Leanne is a PhD candidate at the Australian National University and has over 10 years professional legal experience working on finance and tax regulation. And in March, she published an article in International Affairs, which was titled "Influencing the Social Impact of Financial Systems, Alternative Strategies," which you can read online now. And during this event, in the chat box, I'll add a link to that article if anyone wants to do some further reading. Leanne, thanks so much for joining us today.
Thank you.
So just before we begin, I have to run through a bit of housekeeping as per usual. Please note that this event today is on the record. We won't be using the Chatham House rule, and a video recording of the discussion will be published on the website in a few days' time. So first things first, Leanne will begin with a short presentation, and then we'll move on to a Q&A. There's going to be a lot of time for questions, so please do submit your thoughts or queries in the Q&A box, which should be visible at the bottom of your screen. And if you have any trouble with the audio quality or anything, like if you have any problems in that regard, then flag it in the chat box and let us know, and we'll see if there's anything that we can do to help. But with that, let's begin. So Leanne, over to you, please.
Well, thank you, Ben. And thank you all for joining today. It's an honor and pleasure to be able to share some of my research with you. Today's presentation is about two crises. The first is the current economic crises we're experiencing in relation to the COVID-19 pandemic. And the second is the global financial crisis from a decade ago. These are two very different crises, and it seems that the way our financial sectors are behaving in them are slightly different. A decade ago, we were accusing financial sectors of profiting at the expense of society, in particular, putting short-term profits first. But it seems that these days, financial sectors, or at least parts of them, are taking actions which seem to involve forgoing short-term profit, and it seems to be as part of their role in the COVID-19 crisis effort. So the question I asked is, what has changed? Is it the case that financial sectors are less keen on short-term profit these days? It's possible, but I suggest that there's another variable operating in the background. It seems to me that COVID-19 is forcing us to change the way we think as a society. And as we change this is more conducive towards financial sectors having a clearer idea of what is the appropriate, what are the appropriate bases on which they can profit. In fact, this new way of thinking is in some ways modeled by a model that I've been developing as part of my thesis work. And the way financial sectors are responsive seem to be what this model predicts. So what is this new way of thinking? I don't want to be too theoretical, but here's a way of deconstructing it. It is based on the institutional logics approach. I'm sure all of these ways of motivating or justifying behavior are familiar to you, and we will have used them all at different points in time. Each of these ways of thinking are associated with a particular form of reasoning or logic. The market logic is based on the idea that it's reasonable to do what's best for you. You take your hard-earned cash and you go to the market and you buy what it pleases you most to buy with it. The political logic works on the idea that it's reasonable to follow whomever or whatever is most popular. And that can be in a positive sense, as in everyone seems to like it, in an indifferent sense, in the sense that nobody seems to care, And it could even be in a negative sense, in the sense that everyone's willing to tolerate this. Then you have the social logic. The social logic is about relationships. And it's the idea that in a given social context, each person fits somewhere in the social hierarchy, and where they see themselves as fitting or perceive others as fitting determines what constitutes reasonable behavior. Then you have the professional logic or academic logic. It's the idea that people who have knowledge, those are the people with authority, and it's reasonable to follow them. Then you have the logic of the state. The state makes laws, and we think that it's reasonable to follow them. And then finally, you have the moral logic. Now, the moral logic is interesting because of the sleight of hand, it can be made completely redundant. We can say that what is right is what makes you happy, what everybody else seems to be doing, what you expect because of your social position, what the expert says, or what the law requires. In which case, it wouldn't be worth putting on the slide. What makes it worth putting on the slide is in fact when it discards all of these other logics. You could say that in its purest form, it's only under the moral logic where it is completely reasonable to give up one's life and liberty or other material comforts, reputation, relationships, authority, and right to justice, all at the same time for the sake of others, for the rest of society. So where did all of these logics fit before COVID-19 in the way we thought as a society? Well, in my article in the March issue of the International Affairs, I basically analysed existing literature, which was aimed at explaining why did the global financial crisis happen from a people perspective. And this was the hierarchy of logics that I found. It seemed that right up the top was the market and political logic. There was a general sense that the financial system existed for people to go and do what's best for them in it, whether that was as a consumer or investor, or as a member of the financial sector. And while people were happy with the outcomes that was producing, then it was politically reasonable for governments to allow this to continue to occur. But when the global financial crisis happened, and we weren't so happy, and everyone shouted at governments to intervene, then intervention became politically reasonable. These two primary ways of thinking were supported by the state and social logic. Our laws were constructed on the basis that they should be facilitative of people doing what's best for them in the financial system. And likewise, that's how we expected our regulators to operate. This was reflected in the relationship between financial and political and bureaucratic regulators. They were, following this pattern, facilitative of financial sectors. And that's how the relationship, according to the literature, was said to work. And then slightly below that, you had the professional logic. Knowledge was being used to justify the primacy of these other logics, particularly economic knowledge, the ideas such as efficient markets hypothesis or the shareholder primacy norm. But it was still below all of the other logics because, say, academic knowledge such as behavioral economics was generating, that just really wasn't a thing until after the global financial crisis. But what the literature showed a gap in was any sense that the financial system had a purpose other than to allow those transacting in it to do what's best for them. There was no sense of the moral logic. Now, if we even just look back a couple of months ago, you could say that this pyramid was quite reflective of the main public discourses, for example, in the media. When we first heard about the crisis, we heard about people who, on one hand, started stockpiling because they got really worried, but you also heard about people who were pretty indifferent and was like, oh, there's a virus, but it's okay, I'm going to keep doing what I like. And that's not to cast judgment on either attitude, because we all had it to varying degrees, but it's to show the predominance of the market logic in this idea that we need to think about what's best for us and then act upon it. The early talk did not say a lot, I would have said, about who the virus was going to impact and what we might have to give up for their sake. The moral logic was down there. And certainly from the medical community, they at least felt that their expert knowledge was not being heeded. But I think the way we are thinking is slowly changing. This is not to say that the flipping of the pyramid is as neat or as complete as the flipping of the slides would suggest. But the messages that I'm hearing in the media now is a lot about vulnerable people. It's about the elderly, the immunocompromised. It's about our healthcare staff who are risking their lives to look after these people who get sick with COVID-19. And we seem to have set our minds that, to a certain degree, that we want to look after these people. So having set this moral goal, then we've gone to the medical experts and said, what should we do? This is the professional logic in play. What I hear these days is everything is justified according to the medical experts say. Not to say that they're unified, but that's not the point. The point is the way we accept what we're going to do is because we see that the medical experts saying so is a legitimate source of authority. And then we are shifting our social and state logic to match. So having been told what to do, we're using our social networks to communicate it, to support one another acting it out, whether that's things like giving people phone calls or dropping off the shopping. And then there's a degree of social shaming. And to the extent that that doesn't work, then we've got laws that enforce social distancing. And if you break them, that will be punishable under the law. But having flipped this pyramid doesn't mean that the market and the political have disappeared. We are as dependent as ever on our private sectors getting us the goods and services we need. For example, in Australia, we have breweries which are producing hand sanitizer. And this isn't because the government has told them to. It is because they have the commercial infrastructure, the commercial know-how, and right now, producing hand sanitizer is a commercially viable enterprise. As for our democratically elected leaders, we will still hold them to account. We are still holding them to account. But the difference from having flipped this pyramid is that we hear a lot more talk about whether the policies of our leaders are any good, as opposed to talk about the quality of their politics. Now, if we take this pyramid and try and apply it to the financial sector, this is how the reasoning works. We start with this idea that we want to protect the medically vulnerable, therefore we need to socially distance, but unfortunately that means standing down people from their jobs, and therefore we have a lot of people who are financially vulnerable. And you could say we have roughly 3 goals. Key ones are to not make sure that we don't have a flood of homeless people because losing their jobs means that they can't pay their mortgages or rents. The second is to make sure they feel financially secure enough to stay at home and wait it out while they are stood down. And the third is to make sure that the jobs are there and ready to go as soon as we lift social distancing requirements. If we think about these 3 goals, they're all about moving resources through space and time. And that is the basic functional purpose of a financial system. So if you look at some of the actions from the retail banking sector that involve foregoing short-term profit, they are things like that provide short-term liquidity. For example, allowing people to break term deposits without charging or providing, and it's also to ensure that businesses remain financed and people are able to keep their homes, so mortgage relief and providing small business lending. And then, but how have we communicated that this is what we want from the financial sector? Having established that that's what a financial system can do in a theoretical sense to achieve these moral goals. Well, the same relationships that we complained about before between central bank governors and treasurers and bank CEOs, it's actually that relationship that now facilitates that communication and cooperation. So we can say, here are the goals. This is ask the question, what can the financial system do to facilitate these goals? What does the state need to change about how it operates, whether say through central banking or other regulatory policy, so that you can deliver these outcomes through your commercial enterprises in the market? And so we end up in the space that we have financial sectors, which are institutions, which are still making decisions that are commercially viable, but this doesn't mean that they are controlling the way in which they make decisions to make their profits. And then similarly, when we think about the public reputation of the banks, we hear a lot more talk about their role in the crisis effort and the policies that they're establishing, and less about what they're doing for individual customers and how they're treating individual customers. My proposition is that if we can implement this framework more holistically in the way we approach financial system reform, we could have a financial system that, say, promoted a moral goal, such as promoting an inclusive and sustainable economy. The reasoning would work something like this. If you want, the goal of the financial system is to promote an inclusive and sustainable economy. How does it do that through its functional purpose? Well, the main job for it is to reduce the transaction costs of allocating resources and risk. You lower transaction costs, it's cheaper for people to participate. More people can participate, the economy is more inclusive. You get better at managing risk, it means we waste fewer resources. When we waste fewer resources, what's left can be used more sustainably. If we start with this tying of the moral and functional purpose, then we can ask ourselves, well, what kind of knowledge do we need to equip our financial sectors with to be able to deliver these outcomes in practice? And then we say, how do we set up the governance or social structures and the regulatory structures, the laws, in order to facilitate the application of that knowledge in practice through their day-to-day job in the market? Having established the basis on which they should conduct their commercial enterprise, we've also established the basis on which the public should put their trust in the financial system, which is so essential to their functioning. If we are able to embed this way of thinking going forward, it's possible that COVID-19 is showing signs that it could work and that it could encourage our financial sectors to become leaders in improving the way that we promote an inclusive and sustainable economy through the financial system. Thank you.
Okay, great. Well, thank you very much, Leanne, for that. That was very interesting. I just have a couple of questions myself before we move to the Q&A with the audience. Guys, if you keep your questions coming in, we've had some great questions already, but yeah, please ask anything that you like and we'll get that going. I wanted to just come back to the pyramid that you outlined in your presentation. And I wanted to ask if you could clarify a bit more around pardon me, around how we define the moral in this. Who gets to choose what is a moral concern or a moral priority? All of the other aspects of your pyramid, they have institutions which to an extent kind of mediate or are able to decide or influence the decisions that are made based on that particular pillar. But with the moral aspect, there doesn't seem to be a kind of innate mechanism for deciding how we decide whether something is moral or not, what sort of things we should be prioritizing over other things. Do you have a take on that?
Sure. So I prefer to use for my thesis work, I've been using the formulation an inclusive and sustainable economy. And the reason I like that formulation is that it's hard to object to. Like, if you ask someone, would you prefer an exclusive and unsustainable economy? It's hard for anyone to say, no, I would prefer that instead. But having it kept so general, you can have it's something that's simple and easy to understand for the public to engage with. But at the same time, it can house any number of academic theories or other philosophies about what constitutes inclusive or sustainable. I like to compare it in some sense to legal systems. Like the publicly generally accepts that a legal system exists to promote justice. And while there's many different theories of what justice involves, the fact that we've got this broad idea that we can all agree on and try to achieve is a starting point for us to work backwards about what that content is.
Yeah, absolutely. Thank you. And just one more question from me. I wanted to ask a little more on the implications of this at an international level. So obviously, what we're talking about often are quite sort of nationally confined decisions made by banks or central banks or particular institutions and particular national governments in terms of regulation and legislation. I wondered, what are the implications for your model at the international level, thinking about the kind of global financial system? Do you think that it still can function in that environment where you have different understandings of regulatory environments, different understandings of even what is moral? How do you generate consensus at the international level for this?
Sure. At the end of the day, I would put, I suppose, the pyramid, it's just a model. It's a way of thinking about things, and thoughts have no boundaries. So if you think about how we do financial system, how we look at financial systems in business practice and regulatory practice now, it's based on common ideologies which are used across many different countries with people who have many different educational backgrounds and business backgrounds, but it draws them together around a way of organizing the system. And so what this model is just a different way, I guess, of thinking about financial system reform that explicitly is trying to solve the problem about how to make an inclusive and sustainable economy. Whereas currently, the typical problem we seek to solve in the financial system is not widely understood as how to get it to promote an inclusive and sustainable economy. So that's how it would apply across boundaries or nationally. It's more the way of thinking and less about like particular structures which can be unique to different jurisdictions.
Okay, thank you very much. So we've got a question from the audience now. So I have a question from Michael Saunders, who wants to know, do you foresee a further change to the pattern that you've outlined as market logic shifts to a desire to open business back up and move away from the lockdown?
So I guess this is just, I guess the way we choose to think in some ways is a choice. I've put this model forward as a candidate, and it's, I guess, a choice whether we want to pick it up and whether we do so consciously. Like certainly people in the financial sector, perhaps if they like this way of, if they feel that this creates a space for them to be a part of promoting an inclusive and sustainable economy that the current primacy of the market logic perhaps doesn't make available, then people have the platform to advocate for it. But at the end of the day, none of this is inevitable. It's us, I guess the way we think about each regulatory reform one by one, each new business practice we adopt one by one, that's how you build the new way of thinking, I guess. That keeps the market logic, but changes its relative dominance compared to the other influences on the way that we think in the whichever situations we operate in, such as in the financial system.
Thanks very much. We've got another question here from John Kraus, who says this model sounds appealing, but in practice, financiers and other business leaders are driven to maximize shareholder return, and their incentive schemes are based on revenue growth. So either we need to change a mindset, which is very difficult, or regulate, and this is also difficult for countries to do in isolation for fear of losing competitiveness. So how do we make that happen? How do we enable this change? How would we, I guess?
So I think what the appeal of this model is that it relies on the people, on the pride that people take in being moral or knowledgeable or part of a professional community to do a lot of the heavy lifting in terms of driving behavior, whereas current ways of thinking rely enormously on regulators and the law doing all of that work. So the question is, though, for example, if we were to say, if we were to, I mean, you could think of it this way, as in the financial system's only as good as the real economy. The essence of a crisis is that the financial system has expanded larger than what the real assets backing the financial system are actually worth. So if you can think of the way of people in the financial system being able to build new ways of thinking about risk, about extending, say, at the moment for what financial sectors do is that they think the future is so uncertain, and so they apply massive discounts to future earnings. Whereas if you were saying, like, actually we have a different goal as a financial sector, and we started developing the knowledge and teaching our future financial sector graduates ways of better forecasting risk and incorporating that into business decisions, a lot of what's happens in the financial sector is a product of what they've been taught and the theories available.
Absolutely. Thanks very much. Now we've got a question from Dipen Mitra, who asks, with this reversal of the pyramid and putting moral logic on top, do you think there are implications for the role of consumer credit in future global economic growth models? He says, over the past few decades, we've relied largely on the growth of consumer credit to provide GDP expansion in many countries across the world. So do you think that if we're coming to sort of put more weight on the moral logic, that would change?
I think that it's a commonly understood issue that a lot of, I guess, spending has been dependent on consumer credit. But I guess, I mean, it's one decision to say, like, do we like that? And do we think that's a good way of running things? But I suppose if you think that it's not, then because it means that there's it makes basically if it boils down to it, consumer credit that is not backed by production is unsustainable. So if we think about it that way, then if we had a professional, like a financial sector who was driven by the academic logic, a key focus of them would be working out how to unwind that consumer credit in a sensible and orderly way that doesn't involve the typical crashes like we saw during the global financial crisis.
Just got a clarification question that's come in. I just wondered if you could just reiterate again what the difference is between political logic and state logic in the graphic that you provided.
Sure. I think of political logic as more about what the people want. It's very much driven, it's people being responsive to what other people think. And it, like in the political arena, that's like how, like our voting, the media cycle, and that sort of things. But in the smaller, like even in the, like, say, a particular part of the financial sector, like say the financial advice industry, it's the sense of this is what everybody else is doing. And so that says, and that's how they benchmark what appropriate practice is. Whereas with the state logic, it's really having that central, I guess, in a way, like when you have a state, you have ministers who are ultimately directly responsible for decisions about what laws they're going to pass, and then they've got a bureaucratic structure underneath them supporting them. Or you have like central banks who, like, you have a central bank governor and their job is to set monetary policy. And those things are not necessarily subject to the political logic. Like, for example, we deliberately make central banks independent of government so that they are less subject to the whims of political logic. So that's how I distinguished between the state and the political logic.
Thank you very much. Now we've got a question here from Patricia White, who's also in Australia. Thanks for joining us, Patricia. So she says, do you think that the model before it was flipped in your telling of it was focused on the individual, whereas now in this new environment, there is more of a focus on community? Like, would you say that that is one of the underlying shifts that we've seen? And if so, do you think it's a good thing? And do you think it will remain after the sort of current crisis point that we find ourselves in?
So I guess I prefer to think of my models as ways of explaining behavior. And if you like the way things are working out, then you will pick one model. And if you prefer a different way of working things out, then the other model is a potential way of achieving that outcome. As for whether it's about the individual or community, there is certainly that sense that because the market logic is very much centered around this idea that people can do what's best for them, and that results in good outcomes. And it's sort of just that good outcomes is a byproduct of people acting in their own interest. Whereas with the moral logic, by definition, it's other focused. So with the moral logic, when I think about what the financial system is, the way I think about it is, what does the financial system do for people who are not the transactants in it? So taking it's a broader spectrum and thinking beyond what do people get out of it other than when they're actually transacting. I like to compare to the legal system. We think of our legal system as being good for society overall in the sense of producing justice and law and order. And not to say that legal systems are perfect, but they've come a long way since, I look at common law systems coming from Australia, but I mean, since how they first started in medieval times, very long way in terms of equality and discrimination and costs and like arbitrariness and all of those sort of things. But most of us accept that the legal system is doing something good for us, even though we've never directly entered into a courtroom or been involved in a legal dispute. And so that's the same thing for the financial system. When I look at the other pyramid, it's very much this sense of what the community thinking, if you will, or the moral logic is, what is it doing for the people who aren't involved? You can't exercise any of the other logics because they're not participating directly or at that particular point in time in that particular transaction.
Interesting, thank you. So we've got a question now about sort of the implications for implementing the system that you outline. So Senya Kirkham has asked, what's the role of the national government structure in your model? It seems that the turn towards moral logic would be complicated without a strong interference of the state in the operation of financial markets. Do you agree with that?
So I think of it, it's kind of setting a different problem than we usually set for ourselves in terms of the financial system. I don't think as a whole society associates financial systems with inclusive and sustainable economies the way like they associate legal system with justice. But in the situation, if you were supposed to implement this, it actually would involve different, regulation rather than necessarily more, because in fact, if it's implemented well and properly, because it puts way more of the burden on people's pride in being part of a socially good thing, taking their pride in being knowledgeable, and of being part of essentially a professional community, that actually lifts a lot of the burden off the state to do the work. So it could even have a deregulatory effect in terms of, as far as regulation means laws on the statute books. it depends on how we implement it, and it also depends on how quickly and to what scale, because you could apply this way of thinking even just to a regulatory framework that is about to come, like a new regulatory regime that is just about to under investigation for the first time as to whether it's worth doing.
Thank you. Now we're running out of time, I'm afraid, but there are two other questions that I would like to put to you. So one is by Archita Anand. Thank you for your question. So they say, with the focus on the moral logic, can we assume that privacy, both financial and personal, are taken into account when developing a sustainable financial ecosystem?
So I think that again goes back to the question of what you're trying to achieve. Like if we want to have an inclusive and sustainable economy, then if you had, say, a look at the privacy laws surrounding the sharing of financial information, you would ask, the natural question you would ask will be, well, what does privacy do for promoting, in terms of being able to lower transaction costs and increase participation in the financial system versus what it doesn't. And it just creates a new measure for how you determine what the contents of your privacy laws are.
Okay, thank you. And then last question, I'm afraid. This is an anonymous question, but thank you for putting it anyway. So they ask here, I think this situation where the moral imperative comes to a higher hierarchical situation is only possible because of this kind of extraordinary circumstance of COVID-19. But do you think that this trend can last in the post-COVID-19 world? And do you think that people will come to apply this moral logic more frequently and more assertively to global issues such as poverty or climate change?
So I think this goes back to choices. In some ways, this moral pyramid, is unarticulated, but it already applies. I would say it's the unarticulated ideal type that applies to the traditional professions of law, the medicine and the church. And I mean, we love our medical profession right now, so I won't say anything about that, but goodness knows that there's a lot of complaints that we hear about the legal system, and churches have a lot to answer for. But the difference between, you could say that when they have failed, it's because they've departed from this pyramid, as in they've put something like their personal reputation or their social standing before the moral logic. And that's why the system's crashed. And it's done terrible and awful things for people. But on the flip side, even when a few people have applied this pyramid, like they've achieved, like you could say they've moved mountains. So if I take the legal system, once upon a time, and even though like medieval time seems a long time ago, people have been making the same complaints about financial systems for there's literature talking about 400, 800 years of financial crisis. So put it in that perspective. Mm-hmm. We started off with I'm talking about the common law system just because of my background. So apologies to people used to the civil system. But the original system, basically, most of England couldn't have their claims heard before it. It was conducted in French, which most of England didn't speak at the time. It was subject to the whims of the king. It bankrupted the English countryside. It happened some years it happened and some years it didn't. The kings bought justice. That was the system we started out with. But because it's always had this notion of justice in it, there have been, you could say, the heroes of the legal profession have taken ideas and they might have dragged their colleagues along kicking and screaming, but they have been able to do it because of the strength of the system. And same thing with the church. If you think of the first century Christian practice of pooling and distributing resources, that's what prompted Rome to institute the welfare state. If you think of things like the faith of William Wilberforce and the repentance of John Newton, because of that strength of that pyramid for them, they facilitated the abolition of legal slavery through the British Empire. If you think of, like last week's presenter mentioned that 40% of civil society in Africa is faith-based, and that's a much higher percentage than what would Western religious demographic data could suggest. So I guess what the framework is saying is that it can be implemented. When it implemented, it works, but it's kind of our choice, and it doesn't necessarily take a lot of people to get it moving.
Thank you very much for that, Leanne Sim. That was a really fascinating discussion. And thank you to everybody who submitted questions. Thank you for joining us in the audience today. And we hope to see you again at future International Affairs webinars. All of the information on those can be found if you subscribe to our email newsletter, which is available on the Chatham House website. But all it remains for me to say is thank you very much. Leanne, have a great day, evening now, I guess, your time. And thank you again to everybody for joining us.